India has announced its monetary policy decision today, highlighting India's favorable growth inflation dynamics. The Reserve Bank of India has kept the repo rate unchanged at 5.5% and maintained a neutral monetary policy stance. This is the second consecutive time that the repo rates have been kept unchanged.
After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to keep the policy repo rate unchanged at 5.5%. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%.
RBI Governor noted that inflation conditions have remained mild during 2025-26 so far and said that the inflation projection has been revised to 2.6% from earlier projected inflation rate of 3.1% in August.
The average headline inflation for this year has been consequently revised lower from 3.7%, which was projected in June, 3.1% in August, to now 2.6%. Headline inflation for Q4 this year and Q1 next year too have been revised downwards and are broadly aligned with the target despite unfavorable base effects.
Sanjay Malhotra highlighted that India's GDP is now projected to grow at 6.8%, up from earlier forecast of 6.5%, reflecting stronger economic momentum supported by robust domestic demand and favorable policy measures.
Real GDP growth for this year is now projected at 6.8%. This is a revision from our earlier forecast of 6.5%. Q2 now is projected at 7%, Q3 at 6.4%, Q4 at 6.2%. Real GDP growth for Q1 next year is projected at 6.4%. The risks are evenly balanced.
All right, and DD India correspondent Shishir is joining us from Mumbai. Hi, Shishir. RBI keeping repo rate unchanged, Shishir, at 5.5%. What does it reflect?
Well, absolutely. Looking at this condition right now, RBI today has stated that some of the reasons they've actually considered behind this, the stable stand here, the 5.5 repo rate will actually RBI try to ease down the pressure here. The reasons which RBI has given its monetary policy stating that probably this pause will allow the previous cuts to absorb in the entire economic system, and that's the reason it will give benefit to the end users as a first stance. The second important stance that RBI has given is that even though right now the inflation looks quite good, especially within the RBI's medium-term range here, but going forward, looking at the geopolitical situation and international external factors, probably this could be the proper stand. That's what the RBI is stating, and that's the reason. We have the tariff talks going on with the US. At the same time, we have seen here that the global tensions also around the world. Probably this stand gives some space for the RBI going forward if it's required to take any rate cut decisions in the future. So that's the second important aspect. The third important aspect, RBI have stated that recently the government have actually announced the GST reforms. Let the GMC reforms absorb in the market completely, and probably will market the RBI will see its results at how it's panning out. So these are some of the reasons that RBI has taken a very cautious note. But at the same time, RBI have also signaled that going forward, if the GST reforms also and other important policy decisions taken by the government gives a fruitful result, then probably there may be some changes in the future upcoming monetary policies. And that's the reason at this point in time to control the inflation, because we have seen that through the GST reforms also, and at the same time the way government have reduced the taxation bracket also, it gives some liquidity in the hands of people, and that's the reason inflation should not flare up. That's a major concern for the RBI. At the same time, they have to stabilize the economy. So these two parameters RBI is closely monitoring, and that's the reason they have taken these cautious steps.
All right, Shishir, we leave it there. Thank you so much.